One kind of car loan charges about 25% interest on average. A traditional subprime lender averages roughly 15% for similar buyers. At this kind of dealer, the same person sells you the car and lends you the money. Many of these dealers never tell the credit bureaus you paid on time at all. At a buy here, pay here dealer, there is no outside bank checking the deal. The dealership carries the risk itself, so almost anyone can get approved. Because they carry that risk, they price the loan to cover it. Payments are often weekly or every 2 weeks, sometimes made right at the lot. That schedule lets the dealer notice a missed payment within days, not weeks. A bank will not lend $14,000 against a car worth $8,000. A buy here, pay here dealer has nothing stopping them from doing exactly that. The same party sets the price and the payment, so nothing keeps either one honest. The interest rate is only part of what makes these deals expensive. Many people take these loans specifically hoping to rebuild their credit. 3 years of perfect payments can leave the score exactly where it started. Ask directly whether they report to all 3 bureaus every single month. A vague answer, like "it helps your credit," really means no, so get it in writing. Assume the car has a tracker, since these devices are standard on these deals. A starter interrupt can stop the car from starting until the payment clears. Repossession also tends to happen faster here, because the dealer always knows where the car is. Ask exactly what triggers the device and how much notice you actually get. Sometimes this option genuinely is the right call, and that is worth saying honestly. A running car at a high rate beats no car at all when income depends on it. Deep subprime borrowers get financed through ordinary lenders every day, closer to 22% with reporting included. Being declined somewhere is information, but assuming you will be declined is just an expensive guess. See if you qualify with lenders who report to the bureaus before choosing this route. Keep the loan term as short as the payment allows, since long terms multiply the cost. Check the car's market value yourself before agreeing to any price. Set a reminder at 12 months to see whether refinancing can cut that rate. Full breakdown at CompleteCarLoans.com. Link below.